Think of a country that entered the year 2023 shrouded in uncertainty, yet managed to outperform broader emerging markets. That's Brazil for you. In a world where economic stability is as elusive as a mirage, Brazil has carved out a unique narrative. The MSCI Brazil, a measure of the country's equity market performance, strutted its feathers with a whopping 15% return year-to-date. It's as if the country was playing a global game of chess and said, "Checkmate." But that's not all. Brazil's economic outlook has received a much-needed facelift, with GDP growth expectations revised to over 2%. It's like waking up to find your investments have suddenly grown twofold. In a world where economies are riddled with anxiety, Brazil seems to be cruising on a highway of economic growth. Now let's talk about inflation, the arch-nemesis of economic stability. In Brazil, inflation rates have been falling, much like a feather descending gracefully from the sky. The central bank, in response, has initiated a rate-cutting cycle. Imagine a weightlifter cutting down on the weights to build lean muscles. That's what Brazil is doing, shedding the burden of high rates to emerge economically fit and agile. Despite the uncertainty, Brazil has shown resilience and an impressive economic turnaround. But what events led to this? Well, buckle up and let's continue this journey of discovery into Brazil's economic awakening. The third quarter of 2023 was a game changer for Brazil. Surpassing all expectations, the economy started showing signs of robust growth. The Brazilian economy came out swinging in the third quarter with a stronger than expected performance that left economists pleasantly surprised. The IBC-BR Economic Activity Index, a key indicator of the country's economic health, showed a seasonally adjusted growth of 0.44% in July, a figure that soared past the anticipated numbers. But the surprises didn't stop there. The Finance Ministry, encouraged by the positive economic indicators, revised its GDP projection for 2023 upwards. The original forecast of 2.5% was boosted to a more optimistic 3.2%. This revision was also motivated by an anticipated economic rebound in China, a key trading partner for Brazil. The third quarter also saw the central bank expecting greater stability in economic activity by the end of the year. This was due to the cumulative effects of its restrictive monetary policy, aimed at curbing inflation and promoting economic growth. However, it wasn't all sunshine and rainbows. Despite the economic strength, government revenues didn't grow at the same pace. This posed a significant challenge for balancing public finances. The government found itself in a tight spot, trying to juggle the demands of a growing economy with the need for fiscal responsibility. Yet the third quarter was undeniably a beacon of hope for Brazil's economy. It was a period that showcased the country's potential and resilience, setting the stage for more growth and stability. The economic performance during this quarter laid a strong foundation for the future, a future that, if trends continue, could see Brazil becoming a dominant force in the global economy. The third quarter was a beacon of hope for Brazil's economy, setting the stage for more growth and stability. Brazil's economy isn't just growing, it's thriving beyond what initial forecasts had predicted. This South American giant has been surprising everyone, not just with its vibrant culture and breathtaking landscapes, but with its robust economic performance too. In the first quarter of this year, Brazil's gross domestic product expanded by a whopping 4%. Yes, you heard that right, 4%. This far surpassed the consensus forecast of a measly 0.78% annual growth. It's a clear testament to the resilience and dynamism of Brazil's economy. But what's fueling this economic upswing, you might ask? A cocktail of factors, actually. First, Brazil is basking in the glow of a favorable international environment. The global economy is recovering from the shocks of the pandemic, and Brazil is reaping the benefits. Second, inflation and interest rates are receding. The Brazilian central bank has done a commendable job in managing these key economic indicators, creating an environment conducive to growth and stability. Third, and perhaps most importantly, Brazil is experiencing a more constructive political environment. The administration has been successful in navigating the challenges of governance, creating a sense of stability that's essential for any thriving economy. But that's not all. The reopening of China has led to a surge in Brazilian exports, particularly soybeans and sugar. This has resulted in a record trade surplus, boosting Brazil's economy even further. The Brazilian real has strengthened against the dollar, and inflation is trending down significantly, adding to the overall economic health of the nation. Brazil's economic landscape is changing rapidly, and the world is taking notice. It's a remarkable story of resilience, growth, and potential. So the next time you hear about Brazil, don't just think of samba and soccer. Remember, it's also a country with a thriving economy that's better than it looks. In the midst of economic growth, Brazil has shown its commitment to fiscal sustainability and corporate growth. This commitment is evident in the new administration's proposal for a fiscal framework plan, a strategic roadmap designed to achieve a balanced fiscal budget by 2024. This fiscal framework plan is not just a blueprint for balanced budgets, but a holistic approach to fiscal responsibility. The plan aims to limit government debt growth, a crucial step towards fiscal sustainability. With the government's debt-to-GDP ratio currently sitting at 88%, the need for stringent controls on debt growth is more important than ever. The proposal doesn't stop at debt management. It also intends to enhance fiscal reporting, promoting transparency and accountability in the country's financial operations. But the government's commitment to economic growth extends beyond fiscal responsibility. It is considering a significant cut in taxes on company profits. This is not just a minor adjustment, but a potential reduction of up to 10 percentage points. The move is ambitious, and it's a clear signal that Brazil is serious about stimulating corporate growth. Economy Minister Paulo Guedes believes that reducing taxes on corporate profits will enable companies to retain more cash. This retained capital could fuel wage increases, training, hiring, and productivity improvements, leading to a more vibrant and dynamic corporate landscape in Brazil. The proposed tax cut, if implemented, could be a game-changer for businesses and could significantly influence Brazil's economic trajectory in the coming years. While the road ahead is challenging, Brazil is making strategic moves that promise a brighter economic future. As we step back and look at the bigger picture, Brazil's economic performance in 2023 paints an optimistic image. The year was marked by consistent GDP growth, surpassing initial forecasts. Brazil not only stood its ground but also outperformed broader emerging markets, with the MSCI Brazil returning a solid 15% year-to-date. The central bank embarked on a rate-cutting cycle, a move that spurred economic activity and alleviated consumer debt. This in turn led to a more stable economic environment and increased demand. The country's fiscal sustainability also came into focus, with a proposed framework plan aimed at achieving a balanced fiscal budget by 2024. This plan, which includes limits on government debt growth and improvements to fiscal reporting, is a beacon of hope for the country's economic future. The government also proposed aggressive corporate tax cuts. This strategy aims to allow companies to retain more cash for essential operations such as wage increases, training, hiring, and productivity improvements. While this comes at a cost to immediate revenues, the potential long-term impact on the economy could be significant. In 2023, Brazil has shown the world its economic potential and resilience. As we look to the future, we can only anticipate more growth and prosperity from this vibrant country.